It's time now for charting futures. Here's Abigail Doolittle. And Abigail, I mean, what a day for stocks. I understand you're starting with, well, volatility.
You're right about that, Caroline. And what a day for volatility. Lots of whipsaws on the day for the major averages. At the lows, down more than 1.5%. Let's look at this through the E-mini futures, the S&P 500 E-mini futures, an intraday chart. What's so interesting, you can see overnight there's actually a bid for stocks, those futures higher, and then coming into the New York session, down, down, down. At the lows, down 1.8%. A continuation of the selling on Monday. There doesn't appear to be a real spark for that, just some panic over the macro risk off that we've been having more recently, of course, around that trade war between the U.S. and China. But talk about a recovery not so long ago, fractionally higher, right now fractionally lower. It's going to be interesting to see how the day plays out. But let's put it into the context of a bigger chart that we've been looking at, because all of this is a battle between the bulls and the bears. And that's true, too, over the last year and a half. Nobody knows, in other words. Take a look at these big whipsaws up and down, trade fears, Fed fears. And then this year, more recently, we've been talking about this pattern that started off bearish, then it actually broke to the upside. It was confirmed for 30.60, but the move up was so far so fast. Resistance was hit first, and then these arrows, which we drew in about a month ago, they actually have started to come down. Right now, it looks like the S&P 500 probably goes down toward the May lows, a little bit above 2,700. If this entire range turns out to be a good one, we could even go back below 2,500. That clearly would be pretty bearish, would suggest the risk off we're seeing is going to continue. I'd like to now bring in Tom Thornton of Hedge Fund Telemetry. And Tom, thanks for joining us. The last time or a time before that, when stocks were at all-time highs, you were bearish, saying that we were going to see a pullback in August. We certainly have the start of that pullback. Yep. Is there more ahead?
Well, I think you're absolutely right. 2750 is the level I've been watching, and we'll see if we get there. We might get a bounce. The market's holding in here today. Resilience.
So let's bring a haven asset into it. These are Treasury futures, of course. And so as stocks have been dropping, not surprisingly, investors looking for those haven assets.
Oh, yeah. Well, look, here we are. We have the futures for the Treasuries, and we're going to talk about gold as well. Both of these have seen a risk-off bid and a very large bid. And this last 5 days is one of the largest moves I've ever seen in the Treasury market, and the largest move since 2011. And right now, the daily sentiment index that we use is at 98% bulls for Treasuries. That's a very high level, and we are due for a breather.
So you think that we see a pullback down toward the 127 level, and that would be what you call it, a 210 or 2.1% on the 10-year?
It's about 210, 205. I think that would be a rather large pullback after what we've just had. Probably caused a lot of people a lot of distress after they just did a little risk off.
So when we look at charts, we typically don't want to talk about the fundamentals, but I want to ask you, you're talking about that this is a huge risk off bid. The other thing it could be, though, is this accommodation that we're seeing around the world. Certainly the Fed, now there's the expectation the Fed may have to lower more than they had outlined just a couple of weeks ago. And if we bring gold into the equation, which you were talking about, we have a year-to-date chart. Everybody talks about gold as a haven asset, but in some ways you could really more effectively talk about it as a hedge against central banks, given the fact that in 2008, I think it was down 40%, not the best haven. So what do you think that gold, when you bring that into the equation, tells us about risk off, central banks, reversal?
This is a gold chart that a lot of gold bugs have waited for a long time.
Yeah, look at that parabolic uptrend there.
And, we just have, it's not on this chart, but we have some upside to mark signals, sell signals at the top. We had a buy signal back in April, and it worked out well. Gold bullish sentiment is at 95%, and that's always been a level that the forward returns just aren't that great.
So very quickly, where's it going?
I think we can get back to the 1400 level. I think we're going to be around there, maybe 1350 if we break that level. But you know what? It's good seasonality right now. I don't know. It's just it's a tough one.
Tough markets. Lots of volatility, as Caroline started off with.
Absolutely.
As Tom Thornton of Hedge Fund Telemetry.